I'm working on the answers for the procurement questions for that 110 questions. Once I complete, I'll share with you team. Okay. Once I upload it in the drive, I will let you know. Okay. And then later you can download it from the drive. Okay.
Okay. Okay.
Okay.
And
Krishna, small question.
Hello.
So part of this course, do you cover little bit or can you give overview on the payables? Because when we say we are familiar with procurement to pay, maybe we have to know little bit about payment.
Even I don't have much knowledge on the payables, sir. It's not mandatory.
Okay.
It's not mandatory, sir.
Okay.
If you want, just see some YouTube videos on how to create invoice, how to create payment. Just watch the videos. That is fine on the YouTube. Okay.
Okay. Thanks.
And in the order management side, I'm actually showing the invoice creation and receiving the payment from the customer. It's almost similar. We will see in the order management also, if I don't get any issues, I'm showing. Okay, we'll see. Okay.
Okay.
But it's not at all mandatory. Don't keep that doubt in your mind when you're attending the interviews.
Okay. Yeah.
I'm starting with the order management module, and these are the connecting modules. These are the connecting modules. So I'll talk about the significance of these connecting modules now. So we create the orders that we received from the customer in the order management module. We create here, we enter here. Okay. And the orders that we entered here, so to enter the orders in the system, we need to create first of all the customer, and item should be there, and item price also should be there. Item price we enter here, item price, and the discounts. So we can also define discounts based on the order value, okay, or based on the order quantity, or we can also apply flat discount also for this product, flat 10% discount, flat 25% discount. So using the pricing module, we can configure the selling price, the selling price of our items, this which is nothing but the sales order price. We can also apply discounts from this module. Okay. And the global order promising module, this is used to identify the schedule ship date for the sales order. Schedule ship date. Okay. After entering the order, based on the supply and demand availability, based on the supply and demand availability, application is going to automatically generate the schedule ship date. So this sales order can be fulfilled on which date. We're able to deliver after 10 days or after 5 days or today. It depends upon the supply chain availability calculation that is done by the GOP. Okay. And also in the GOP, we can also configure the delivery org also, from which organization we wanted to deliver. That org also we can define here. You need not to enter the delivery org in the sales order. You can create a rule here. According to the rule, automatically application will identify the delivery org. If you want, you can enter the delivery org here. You can enter. If you don't enter, it will go to the GOP. Inside the GOP, whatever the rules that we created, according to those rules, it will identify the delivery org. Okay, from Hyderabad you want to ship, from Bangalore you want to ship, from Pune you want to ship, or from New York or from California, from which inventory or nation you want to ship, that will be identified from the GOP. So the purpose of GOP is two things. One is to identify the scheduled ship date for the sales order. Another one is to identify the delivery org for the sales order. Two things. Okay. And here pricing model purpose is to identify the price of our items for the sales order and also to apply the discounts. Okay. And distributor order orchestration. This is kind of a workflow in EBS. This is kind of a workflow in EBS. So distributor order orchestration, it will identify the next steps for the sales order based on our actions or based on the data that we entered in the sales order, it will determine the next steps for the sales order, okay, which is also called as orchestration simply. In short, this is also called as do, and in elaborated, this is called as a distributor order orchestration. Okay, and next is inventory, because inventory is also connecting here, because you are shipping the product from the inventory only, because where we are maintaining the stock we are maintaining in the inventory. Okay, so delivery has to be done from the inventory only. So picking and shipping, we do it from the inventory only. So the sales order entry, we do it in the order management. And for that sales order, the price we identify from here, and discount also we identify from here. And from here, we identify the schedule ship date for the sales order, the schedule ship date, and also we identify the delivery org also. And from here, we'll identify the next steps for the sales orders. And from here, we perform the picking and shipping for the sales order. Okay, and how the procurement is connected? How the procurement is connected? So some sales orders, like we don't deliver from our inventory organization. We don't deliver from here. Okay, we deliver from the procurement, nothing but from our supplier. Suppose take an example of. So this is called as a dropship and back to back. And take an example of all the e-commerce sites like Amazon or Flipkart. Like Amazon or Flipkart, what they are doing? Okay, they are taking the order from the customer, from us, and they are processing to their suppliers, and their suppliers are delivering the product to you. Okay, they're not delivering the product. Amazon is not delivering the product, or Flipkart is not delivering the product. So you're ordering Apple from the Amazon. Who is shipping the product? The supplier. The supplier is shipping the product. Okay, so similarly, here also we can take the order from the customer, and after taking the order, we don't deliver from our inventory, and we will process to our suppliers as a purchase order, and we will ask our suppliers to deliver the product directly to the customer. This is called as a drop ship. We are not shipping, we are dropping our shipment. Who is shipping the product to the customer? Our supplier is shipping the product to the customer. This is called as a drop ship. Okay, in that case, the procurement and order management get connected. Procurement and order management get connected. Okay, and coming to the cycles. So these are the different sales orders that we'll discuss in the order management. The first cycle is standard sales order, where we take the order from the customer and we ship from our own warehouse, and we are going to invoice the customer, and we receive the payment from the customer, and we reconcile, and then we post it to the ledger. We post it to the ledger. Okay. Almost 30 members are there. Good count. Thanks all for connecting. So standard sales order is where we ship the product and when we invoice the customer. And this is ship only. The ship only sales order is used when you're sending samples to your customers. When you're sending samples, do you bill the customer? Do you invoice the customer when you're sending samples?
No.
No, right?
No.
Okay. And also take an example of some demo products are there. Demo products. Okay. So company is going to send you the demo product. You can use the demo product for 2 weeks or 1 week. And if you like it, then they will, you can pay the amount and they will send you the original product. Okay. So when they are sending the original product, that's a standard sales order, like ship and invoice. But here in the case of ship only, demo product. So when you're sending the demo product to the customer, so you're not invoicing, you're just sending the demo product to the customer for 1 week trial or for 2 weeks trial. You're shipping the product from your warehouse. It is not in your warehouse. It is at the customer location. That's why you can use the ship only sales order. Ship only sales order purpose, I'm telling you 2 business scenarios. One business scenario is whereas when you're sending samples to the customer, okay, and other purpose is demo product, when you're sending the demo product to the customer. These are the 2 business scenarios I'm just covering, and there could be many business scenarios are there, from client to client, from business to business. Okay, and next is bill only. Take an example of Domino's. Okay, so in case of Domino's, there are 2 options are there. Okay, one is home delivery, and other one is takeaway. Okay, takeaway is nothing but
We go to the store and collect.
Huh?
We go to the store and
Yes.
take.
Correct. We go to the store and we collect the product. Okay. In that case, the company is shipping the product to you. No, the company is just billing you. So in case of takeaway orders, you can use a bill only sales orders. Okay. And when there is a sale, definitely there is a return. Definitely there could be a return. Okay. So these are the different types of returns. One is where customer is returning the damaged product to your company. That means we are receiving the damaged product from the company. And after receiving the damaged product, we are creating a credit memo. Credit means what? Which is going out. Because we have to return the payment to the customer, right? So we will create a credit memo. And again is the credit memo. We will return the payment to the customer. Okay. So this is one type. And another one is return only. Return only means the customer is returning the damaged product to us. The customer is returning the damaged product to us. And after we receive the damaged product from the customer, there could be different business scenarios are there here. Nothing but we repair and then we send it back to the customer. Or maybe we replace that damaged product with the original product. We are not returning the payment. We are not returning the payment. What we are doing, we are repairing and we are sending the same product back to the customer. Or maybe we may sending the new product in place of the damaged product. We are not returning the payment in this case. And the last case is the customer is not returning the product to us. Why? Because even though if we receive the product, we can't do anything with the product. It's already damaged and we need to scrap it if we receive also. So unnecessary transportation charges from the customer location to the company location. So we're asking the customer to scrap from their side itself. Okay. And why we have come to that decision? Because we asked our executive to go to the customer location. Our executive has verified the product physically. Okay. And our executive has confirmed that the product is really damaged. That's why we are asking our customer to throw it away or scrap it. Because if the customer is sending the product to the company also unnecessary transportation charges, we don't even that is also no use for us. Okay. In that case, no return concept, nothing but customer is not returning the product to us. We are just returning the payment to the customer. That is credit only. Clear as of now? Beginners, freshers, clear with these scenarios?
Yes, sir. Yes.
Yep.
Okay. And the next cycle is dropship sales order. As I mentioned, we take the order from the customer. Okay. And we don't ship from our warehouse. We process to our supplier as a purchase order. Nothing but the sales order is converting as a purchase order. Okay. And we are asking our supplier to ship the product directly to the customer. Sir, what is the business advantage of the dropship sales order? Okay. Suppose take an example. Your customer and your supplier is both are from the Chennai itself. You are in Hyderabad. Let's take your company is in Hyderabad and your customer and your supplier both are from the Chennai. So you can ask the product directly to deliver to the your customer, right? Here, what are the advantages? One is the delivery time. You can decrease the delivery time and you can also avoid damages during the transportation also, because if it has to be delivered to Hyderabad, from Hyderabad to delivering to the Chennai, you can avoid the damage of the product also. And also most importantly, transportation cost. Correct? Transportation cost also you can save. And even packing cost also you can save, because if it has to be delivered to Hyderabad, it has to be packed more carefully. But when you're sending from Chennai to Chennai, that much packing may not be required. Okay. So these are all the business advantages. Okay. And one more business, real business cases is, suppose take an example of the suppose see these power generators. Okay, you might have find these power generators in India when any bridge construction is happening. These power generators. Okay, suppose you are getting an order of 1,000 power generators or maybe 50,000 power generators. Is it possible to maintain a stock in our warehouse? And also you need a big warehouse also to maintain the stock. In this case also, we don't maintain the stock. What we do, we take the order and we process that order to our supplier, and we'll ask our supplier to deliver the product to the customer location directly, because it is going to occupy a lot of space also. Okay. And one more business case is, maybe the products may expire very quickly. Suppose if you are maintaining the warehouse, suppose if you don't receive an order from the customer, there is a chance the product may get expired. That's why we don't maintain the stock for such kind of products. So when we get an order from the customer, we process to our supplier is gonna deliver the product to the customer. Because if you are buying and if you are maintaining the warehouse, if the product get expired, so it's a waste of money from our side. So in that case also, you can use the dropship. There are multiple cases are there where the dropship concept is used. Okay, one case is when the customer and supplier, both the locations are nearer, then that is one advantage. And another advantage is because when you don't want to maintain your warehouse also, you can save your warehouse rent or space, whatever you can save. That is also one more advantage. And another advantage is when the product shelf life cycle is really less. In that case also, you don't maintain your warehouse, and you'll ask your customer to your supplier to deliver the product to the customer. And in 2018, I worked on a project. That client manufactures printers. Okay, and they have a plant in China, and they have a plant in US also. They have a plant in China, and they have a plant in US, and they have a plant in India. They have a plant in Singapore and South Korea also. Okay, so what they do is when they get a order across the globe, when they get an order, what they do is, based on the customer location, they're gonna transfer the product or ship the product from the nearest plant. If the customer location is nearer to China, then from the China plant, they will ship the product to the customer. If the customer location is nearer to Singapore, because it's a global company, they may get orders from across the globe, from any country. So based on the customer location, they're shipping from their own warehouse plant. And in that case, they are using dropship. Why they are using dropship, I will tell you. Because they are considering as two companies. They're considering as two companies, because if they're sending from their own plant, that's a normal sales order only. That is this one. Correct? Because you may be having manufacturing plants, and you are shipping the product from your own manufacturing plant to the customer location, that is normal sales order only. But here the confusion is, they are considering the manufacturing plant as one company and selling as another company. That means their manufacturing plants are their suppliers. They consider like that. Understood?
Yes.
Okay, so their suppliers exist in China and Singapore, South Korea, India, and US also. So what they are doing when they get an order from the customer, and they're shipping the product from by asking their suppliers. Okay, in that case also they are using the dropship flow. Okay, there could be different business reasons are there why the dropship is used. Okay, you might face these kind of questions in the interview also. What is the advantage of dropship sales order, and why this sales order is used in businesses? Can you tell me some examples? Okay, can you tell me some examples on the bill only? What in which business cases the bill only used or ship only is used? Okay, you should be able to explain the business importance of these cycles also, because being a functional consultant, not only having the application knowledge, you should have the product knowledge. You should have the business knowledge also. Not only product knowledge, you should have the business knowledge, because we are going to implement the product for the business. So in a statement, if I ask you, this is my answer. The business drives the product. Business drives the product, not product drives the business. According to the product, business will not work. According to the business, the product should work. That is the expectation from the client. This is the expectation. Correct? This is the expectation from the client. So you should have a business knowledge as well, not only the application knowledge, business knowledge also you should have. What is the purpose of this cycle, or what is the purpose of this setup? You should be able to think. And next, back-to-back sales order. So far, good?
Yes.
Yes, sir.
Okay.
Yep.
Next, back-to-back sales order. In case of back-to-back sales order, we are not maintaining the stock. Okay. And what we do is if you are maintaining the stock and if you are shipping from your warehouse, that's a standard sales order only. But here, what we do is when we get an order, we process that order to our supplier and we receive the stock. We receive the stock, and after receiving the product from the supplier, we ship to our customer. It's called as a back-to-back. In case of dropship, we are not shipping from our warehouse, but in case of back-to-back, we are shipping. Here our supplier is involved because we are receiving the stock from our supplier. After receiving the stock to our warehouse, we are shipping to our customer location. This is called as back-to-back. Okay, in this case, 3 modules are connected: order management, procurement, and inventory. All the 3 modules are connected in this case. Correct? In this case, inventory connected, team? In this case, inventory connected?
No.
No.
In this case, it's inventory connected, right? Because you are shipping from your own warehouse. Okay. In this case, our inventory connected?
No. It's only credit.
Yeah. Here?
Yes.
Connected.
Yes.
Yes. Next, transfer order. This is a kind of intra-transfer only. This is kind of intra-nation transfer. In case of like, see, what is the difference between sub-inventory transfer and movement request? Purpose is same. But in case of movement request, there is a process that your documentation process you are following in case of movement request. So similarly, the difference between intra-transfer and transfer order is, in case of transfer order, you are following a process and you are following approvals also, and you are following the documentation also. You are following the process, you are following the documentation, there is approvals also in case of transfer order. Okay. So purpose is same, transfer the stock across your nations. Purpose is same, but the difference is the approvals and documentation and process. Okay. So this is in case of EBS, it's called as a IRISO. In case of EBS, it's called as a IRISO, internal requisition and internal sales order. For internal requisition, we can configure approvals. For internal requisition, we can configure approvals. Okay. It's similar to the IRISO flow. The transfer order is called transfer order in Fusion. And next, this is the cycle. This is the cycle. First, this is standard sales order. First, we enter the order details in the system. And before entering the order information in the application, there are different business cases are there. Business cases, nothing but how this order is received. First of all, before entering in the application, you are entering in the application. But before you enter in the application, how that order is received. Let's discuss on that. In what are the ways that order can be received by the client? Just think like a client, or think like it's your own business and answer me.
You can
by phone, by email, by chat,
By EDI.
Okay.
I receive a purchase order.
This is sale. Okay.
from third-party site.
By the
You
sales
can
of the
receive a
platform.
quote, then that quote can get converted to order.
Yes. Okay.
Also on the company portal.
From the company portal. Okay. Okay, let's take my